All right, good morning. It's November 2nd, 2016. I just wanted to um, be a lot more active because this represents opportunity for a lot of the members, especially the new ones. So take a look at your IV rank here on your Thinkorswim chart. 40, it's at 49. Like I said, this is where opportunity strikes. Yesterday, as you can see, IV rank broke 50 pretty much for one of the first times ever. All the scripts for Thinkorswim are on the free forum, or let me know and I will get them over to you. One way you can do it too is on Doe. Here's a great way on Doe. Go to your grid page. I have here notable lists. All right, you can click on notable stocks. See this button right here, filters. I'm showing all, but I'm excluding earnings because I don't want to worry about earnings. IV rank is 50 to 100. I'm only selecting 3 or 4 stars for liquidity. Okay, so these are what's showing me as available right now as far as stocks go, right? So nothing quite hit 50 yet. If you want, you can click on this right here, and there's a list called Tasty Trade. This is the most common Tasty Trade stocks, same parameters, same stuff. So you'll have indexes like SPX in here, but that's very expensive, $2,103 a share. VIX, of course, IV rank is getting high, and whatnot. So just get ready. Um, Yesterday was, oh, let me go back to trade real quick. And oh, wait, I'll go back to, well, in here, you can look at different things like stock curve and table. So if in though you want to look at it like it's Thinkorswim, you can hit table right here and it'll switch. See, here you go. Here's SPY, and you can shrink these. Okay. And look, so 45 days away, we can go. Here's what I got here. See, so this is the ones we talked about yesterday. Now it's 44 days away. And as you can see, yesterday would have been a great time to sell premium, but like I told a lot of people, if you want to wait, wait, because IV rank can easily get higher due to the election. So you can treat this like a binary event, almost like an earnings play, meaning you can go ahead and wait till November. I'll zoom in real quick. You can go ahead and wait till November 7th, right? The day before the election. I predict if you do that, IV rank will be higher, probably even close to 100, and then it'll collapse. And then from there, you can sell ones. You can do the standard golden get. A standard golden gecko is about 1 standard deviation away, which you can do something like this. All right. You can do a strangle. Go to here, click on short strangle, 45 days per expiration, and you can do 1 standard deviation away at that time. All right, and it'll show you like this. Now, for those who are new to Dole, this is nice because wherever it's green, so here's where SPY is right now, okay? This green area means as long as SPY or any whatever stays in this green area, that's where you make money. Anything outside of that is where you lose money. That's why it's red. Here's another thing I like about Dole. See this brown shaded area right here? That's the expected move, meaning the arithmetic says this is the expected implied volatility for this time frame. Okay, so the math says it should not move. It can go up or down within this time frame. But say, well, that's 44 days out. Yeah, well, you don't want to leave it on for 44 days. You want to take it off once you hit 50% of your max profit. Again, what does that mean? If you sell this, you're going to collect. People are going to pay you this much per 100 shares. So that's $187, right? Or $1.87 credit. So that's what you sold it for. That's the most you can make. Because you're selling it ahead of time, you have to buy it back later. If you can buy it back for 50% of what you collected, that's 50% of your max profit. That's the terminology. Okay, so if you can do that, great. Or if you put this trade on yesterday, when this gets to 21 days expiration, take it off. That's what the studies have shown. Now you can see, well, Mark, what's the expected move by November 8th? Good question. What you could do then is you can clear this, right? You can go to strategies, do the same thing. You can reduce this days to like 2 weeks if you want, or I'll teach you another way to do it. This same trade you have on here, where it says expiration right here, click on the minus sign. And you'll see it goes down to 37 days. Click it again. You see it goes down to 35 days. And what if I just click it and you can see what happens in, let's say, the next 10 days? Because today's the what? Second. So in 7 days, this thing will be over. So you can see, well, what's the expected move in like 9 days? Okay, here. According to the arithmetic and the implied volatility, this is the expected move. And you can zoom in by doing this. Okay. The expected move of the SPY is here. It shouldn't go below here or here. That's the expected move. Okay. So the theory is implied in volatility is usually greater than actual. So the implied move is usually greater than the expected move. Okay, so in 9 days away, what is one standard deviation away? That's this blue lines right here. So what you can do is you can bring in these strikes. See this width right here? Click this sign. Look how it brings in. So in 9 days, you could be right outside the expected move. So even if it moves a little bit outside, like I said, as long as you stay in the green area, you're gonna make money. Okay, long as the SPY stays within the green area, and IB rank will collapse because the binary event is over. Now you can move it a little bit in if you want, just collect more money. See, so because this, whatever, as close as you can. And you can collect, there you go, $1.19. All right. Now, so well, Mark, but what's my resulting buying power? Well, your max loss is undefined. So if you want to cap that loss, what you could do is you could buy the wings. Okay, so what does that mean? When you hear them talk about buy the wings, see, this is your risk graph right here. Okay, there's your standard deviation, the curve line. See how it looks kind of like a bird? If you're looking at a bird head on, these are the wings. Well, if you buy the wings, you can limit that risk. So what that means is you can do one of two things. You can go to strategies right here, go to iron condor, go to normal iron condor. See this? One step dangerous way, you can do that. And then you can do the same thing. Reduce this expiration down to whatever, 9 days, like I just did. Whoops. Whoa, whoops. Too much. Right around there, okay? So, and then you just move in the strikes. So see, you do the same thing. You can move in the width like this. Now you're not going to collect as much because, again, for you new people, I will, and then you move this out to the two standard deviation line. So here's what I mean by that. Okay, one standard deviation line, that's these blue whitish vertical lines. Two standard deviations, see right here? This is outside vertical lines. When you buy the wings, here's the bet you're making. When you sell something, when you sell this 2025 put, you're betting that the SPY will stay above this $202. Let me zoom in so you can see a little bit. Okay, $202.50. When you sell the 218.50 call right here, you're betting it'll stay below $218.50. So this bet is betting it'll be above this mark, that price. This bet is betting it'll be below that price. Now, if it goes outside that range, it'll be a full loser. This one will be a loss. This one will be a win. Okay, but your loss will more than cover your win. So what you do is when you buy a call, you're betting that the market or this underlying will stay below this. I'm sorry, above this, excuse me. When you buy a call, you're betting it'll be above this mark right here. And then when you buy a put, you're betting it'll be below this number. So in case there's a huge move, right, this kind of protects you is all that you're saying. Now the chances of that happens is, see this little tile, click here. Now here's your probabilities of being right. This position has an 83% chance of being right. This position has an 85% chance of being right. So together you have a combined rate of being right about 73%. If you look at individually, this only has a 2% chance of being right, meaning the chance of the stock dropping below this line in the next 9 days is only 2%. Same thing above here. So when now this little orange dot means that it's very illiquid, meaning it'll be hard for you to get out of. So you kind of want to move it around a little bit so till that goes away. But because you're buying something so cheap, you're going to buy it for a penny. It's going to be hard to sell. See, it goes away. So it doesn't really matter because you're not really going to, you're just buying cheap insurance. You're not really going to try and close it anyway. I'm worried about that little liquidity measure down here. Okay, so let's leave that there for now. All right. So there you go. Now look what happens. When I click on this, your profit is 73%. You're going to collect 95 cents. However, when I click on this, now your risk is only $755. Okay, so what is 10% of $755? $75. You're collecting $95. Okay, that's if you collect the max profit. So if you take this off, if you wait the whole 9 days, if you can collect half of that, like I don't know, 45 bucks, right? That's still a good return on your risk, right? So that's the basic strategy. You know, you're going to take it off as soon as it's you know, 50% of max profit. As soon as the event's over, you only have 2 days left, and you're going to take it off. Now, here's the neat thing about Doe. If you want to check what the difference is, here's a credit, right? If I double click on this, delete it, double click on this, delete it, you can see the difference. You went up by 2%, you're collecting more money, but technically your loss is undefined because technically it's possible for the SPY to go to 0 and it's possible for this to go all the way up to infinity. But you all know that's it, you know, but that's the math. I mean, it's highly unlikely, so that's the math. Now, if you want to see what it looks like back on, what's neat about Doe is just click here, undo. Look what happens. And there you go. And then you can just, you know, put on the trade. Okay, so that's one thing if you guys want to just trade the event. If you want to do it on a consistent basis, you don't have to do this 9 days out. Okay, you can do the normal, and I'll clear this again. I'll go strategy. And by the way, that last trade you can do in an IRA. That's not what I do. I do a lot more trades, and I do things a little bit different. But I kind of want to show something. Show you folks what the basics are. All right, so here we go. If you do this. Okay, this is close to 45 days out. You can still trade this because you're betting, like I said, on this happening on the 7th or 8th, on the 8th. You're betting on IV rank going higher. Okay, let me zoom out real quick. How can I? Oh crap, I can't move this crap around, can I? Hold on, I think I can do it from right here. There we go. So November, between now, if you want to wait between now and then, IV rank will go higher. After November 8th, IV rank will collapse, and no matter which way the market goes, as long as it's within that expected move, you're going to make money. And then what do? You rinse and repeat. Okay, so if you're new, here's your IV rank right now. Here's a standard chart I use only because it's habit. I used to be more of a technical day trader and whatnot. I still like this because it kind of gives me an idea on if I want to skew or have a bias on direction based on trade volatility, but whatnot. If not, just go here, go to studies. If I share the studies with you and you don't want to use all these, you can change them. So if you go to edit studies right here, it'll show exactly what you have here, and you can, you know, delete what you want, add what you want, and then save that as a different set. Okay, and if you want to actually see the script, just look for it over here. So for example, see where it says IV rank right here, SD, just look for IV rank over here and you can actually see the script. See IV rank SD, click on this, right click, see where it says edit and or copy, and you can actually see the script right there. All right, so good stuff there, right? But in the meantime, just go like this and then you can save a different stat. So sometimes over here you'll see, whoops, load a set. I'll load the one that just says IV rank only, so it'll just look like this. All right, and you'll still have these scripts in here as well. So what this means is current IV rank. Here's your actual implied volatility right now. Here's the average daily 1 standard deviation move, so it'll go plus or minus $2.68 for the day. And here's the week, plus or minus $5.90. See, so if you zoom in like this and you want to go well, plus or minus $5.90, that's where are we at now? That's, I don't know, roughly 216 on the high side and I don't know, 204 on the low side, right? Roughly. Well, look. See? For, well, this is